Good morning, folks. Here at PDAC, day one. Once again, I'm here with Amir Adnani, the chairman of the board of Gold Mining, Inc.
Good to be with you, mate.
Good to see you once again. So since we last talked on camera, and that was in San Francisco, geez, already about 5 months ago, or is that right?
Time flies, yeah.
5 months ago.
Yeah.
You've had some significant news at Gold Mining. Why don't you elucidate on what that news is?
We've really sort of continued with the execution of what we've been doing for 7 years now in terms of acquiring projects, de-risking them, adding value, and we're now in 5 different countries in the Americas, and so the depth and size and dynamics of the team is becoming very interesting and substantial. You know, this is a.
So is that going to lead to another name change, Gold Mining Americas or something?
I think Gold Mining gives us
that's a good one.
nice wide coverage to cover.
GOLD, what a great symbol.
There's a great symbol. But basically, you know, so far since our last interview, you know, we've completed a new 43-101 resource report for our newly acquired Crucero project in Peru.
Southeast Peru in the Puno Gold Belt, a really hot area right now that I am familiar with.
You are familiar with it, and it is a hot area, and I think it's a great sort of validation of where we go shopping. You know, we continue to buy projects and that check a number of boxes, right? We're looking for those projects that have previous drilling. And we look at that drilling as replacement value. We say, look, what would it cost to replace almost 30,000 meters of drilling that was done at this project, in particular at Crucero?
$45 an ounce.
45, there you go. There you go. You remember that from our conversation. So we like to be below that unit discovery cost that the sector's seeing, which is about $45 an ounce. Well, we like larger properties as well. So we take a strong technical geologic view of the upside potential of a project. And you're right, here in the sense of where Crucero is situated, it's in an area that is not seeing a lot of great interest for gold exploration. But hey, it also happens to be in the country of Peru, where mining is a very important part of the economy, an important part of GDP and exports. So back to the theme for us, where we want to be in countries where there's mining law, there's an established mining industry. We're taking on the risk of being the first of trying to change everything. We can this way be better protected when it comes to licensing and permitting and just the rule of the law and knowing that's in place. But at the same time, focusing on buying these bargains that are out there right now when the sector is still, you know, we're not in a bull market for gold. So, you know, the reality is this is still bear market territories, whether it's 1,100 or 1,250 or 1,300. And Crucero has been a great addition for us. You know, we picked up basically 1 million ounces of measured and indicated, 1 million ounces of inferred, both just over a gram per ton gold grade. So we were continuing to enlarge our total inventory of measured and indicated resources, which our global M&I number now is about 10 million ounces, and our global inferred resources amount to about 11 million ounces.
So let's talk a little bit about that global mineral inventory. Okay. So you've got 10 million ounces of measured and indicated gold ounces in the ground.
Right.
And your current market cap's about $130 million US.
That's right, that's right.
So that's $13 an ounce. So I know it costs you about $45 an ounce to drill out a deposit. It takes you about $45 an ounce to acquire historically, but you've acquired these ounces cheaply, generally with just minor dilution of the company. $13 an ounce, what a bargain.
Well, it is a bargain, but let's not forget that, again, just so it's not confusing out there, that doesn't include the 11 million ounces of inferred resources, the global inferred resources that we're talking about. So yes, you're absolutely right. If you just look at the company's market cap today and just look at the measured and indicated resources, the global M&I resources of 10 million ounces, that's about $13 an ounce just on M&I.
You've also got quite a bit of copper too, so correct me if I'm wrong. 2 billion pounds of copper in your mineral inventory?
You're right, and basically, you know, part of our strategy was to acquire gold, copper, porphyry projects, and Colombia and in Alaska with our Whistler
Right.
project. These are gold copper porphyries. And so when you look at the copper kind of resource inventory, it's about just under 2 billion pounds of copper resources.
That's
On
a lot of copper.
It's a lot of copper. On a gold equivalent, you're talking about 5 million ounces of gold equivalent numbers. So we're not factoring all of that in. I think that's what really kind of shows the deep value that has been built in gold mining. And this didn't happen overnight. I mean, it's taken us, like I said, 7 years to put together at the bottom of the cycle this very sort of extensive portfolio of significant gold resources, but having had the strategy to acquire gold copper porphyries, frankly, when they were out of favor. On average, copper prices were $2.50 a pound when we were buying those projects. And so it was before this run that we've seen in copper, putting copper just over $3 a pound. So it was a better time to buy gold copper porphyries when we were buying them, and they were cheaper as a result of overall sentiment at that time. But as you know, we also have over the last year made a strong entry into Canada with our acquisitions in the Northwest Territories there. That's one of the highest grade greenstone gold belts with our Yellowknife project.
District, yeah.
And so this year that's been another kind of key update for us since I last connected with you, is adding to that land package, expanding our land package there with further acquisitions that we've made around the main Yellowknife gold project. And speaking of which, that project, after acquiring it, we now have over 200,000 meters of diamond drilling there that is now being modeled and put together. And it takes a long time to go through such an extensive database, but that is a 43-101 resource report we haven't published yet. So it's a good position for us to be in, because despite all the resources we just covered, all of that still doesn't cover actually or include one of our acquisitions from last year, Yellowknife. And again, it's a project that has a tremendous amount of drilling, great history, $60 million of past work that was done there, completed there. So that will be part of our near-term catalyst, is to publish a new 43-101 report and continue to de-risk the current portfolio, whether it's improving the future economics by doing royalty buy-downs or permitting or remodeling all this extensive drilling that has been done. This is basically what we call cheap work. Expensive work is drilling, but cheap work can be meaningful in terms of advancing a project, but without depleting your treasury.
Also cheap work in acquiring, because we've already mentioned. Now, how you've essentially only diluted the company incrementally with shares, and market cap hadn't gone down. But market caps in this business right now, the gold price is what, closed 13.22 on Friday, something like that. We keep bouncing against resistance, and the gold price is going up or down depending on what US dollar, but we keep hitting this resistance at 1360, and we can't quite get over the hump. But when you test these things time and time again, eventually it will, no matter what the catalyst. But these gold stocks, particularly the junior explorers, they've just lagged. I mean, your market cap, $13 an ounce in the ground per ounce of measured and indicated gold. So that looks pretty good for the share price of Gold Mining Inc. going forward.
I think there's incredible value in the sense that if you look at our share price in 2016 at the same gold price that we have now, I want to say we were 3 times higher or 2.5 times higher than where we are now. But we had probably 40% or 30% less gold resources and cash. I mean, one of the things that we've done, and we did at a much higher, at a much higher price. I mean, at $2.50 a share, compared to now, we're at $1.25 a share. I mean, we raised over $12 million. If all of that cash is still on hand, because we're still sitting on $15 million of cash.
Rest assured, I've been accumulating Gold Mining Inc. shares at the current level, and as you know, I'm a pre-IPO. I was a shareholder of this company when it was private, before it was even public. So that tells you what I think about your current share price.
I'm fully aware of that, and I appreciate that. And look, we see incredible value here. But generally speaking, to go back to your broader point, I mean, I see that incredible dislocation in our share price now compared to 2016 at the same gold price.
Right.
But it is a dynamic that's across the gold sector. You're right. Gold stocks are lagging the gold price right now. And if you look at the gold, the price of gold shares as a basket or as a ratio to the gold price, it's almost implying a bear market.
Yeah, so,
and here we are like $40.
So I will say that this, in an optimistic view, is that the gold price is front-running gold equities right
there you
now.
go, okay. And look, this could happen because we've had some volatility in the broader stock market. You know, we're off to a very volatile start. February was a very volatile start for, you know, the Dow Jones and, you know, the broader stock market.
All U.S. markets. I mean, the VIX is double what it was a month ago.
That's it. So I think maybe the dust needs to settle a bit in terms of just where equities in general, not just gold equities, but all equities, find a new kind of baseline. But as all of this happens, gold quietly is in a stealth, quiet bull market, and we're knocking on that door, that 1360, 1365 door, which you know, when we do kind of break through that, which was the 2016 high, it feels like there could be a slingshot effect with the equities playing catch up.
Yeah, next resistance would be at 1400. But you know, what we like to see in these markets are stepwise increases in price. So folks, you know, I'm committed to gold mining. I just told you I've been accumulating shares. This company is sorely undervalued at a particular time. Amir, thank you very much once again for your time. Consider Gold Mining Inc. I'm on board, maybe you should be too. Ciao for now.